2.75%. That's how much Italy paid today to borrow for 3 years. It's the lowest since October 2010 and well down from the 4.65% paid as recently as July. I'm Jamie McGeever and this is today's Market Pulse. I'm joined now by Michael Leister. He's Senior Interest Rate Strategist at Commerzbank in London. Michael, Rome couldn't have asked for a better set of auction results.
Yeah, absolutely. Quite a strong set of results across the board. In particular, also here, the long bond had been well covered and also in strong volume. So indeed, we're seeing the GCC decision and also the ECB backstop making an impact here. You
mentioned that those two big events this week. Can we say that this week marks the beginning of the end of the crisis?
Well, obviously, this is the big hope, right? And this is also what the policymakers are aiming for. Nevertheless, we had this benign scenario a couple of times before, in particular when we think back to Q1 of this year with LTRO-related rally, which then lost momentum as basically as these policy actions from the ECB weren't followed up by actions on behalf of the politicians. So indeed, we respect this rally now, but still we are not convinced whether this will indeed mark the turning point for the crisis.
Okay, and it wasn't just Italy selling debt today. Ireland came to the market selling bills. The yield fell to 0.7%. One of my Irish colleagues joked that Ireland might be now seen as a safe haven. At least I think he was joking.
Well, obviously, there we're seeing basically the zero interest rate framework making an impact again, as we've seen with other issuers. And I guess what is quite clear that selling bills these days or selling anything short term is quite a different story than selling long bonds, in particular when we talk about the program countries, i.e., Ireland and Portugal and also Greece.
Okay, just to finish up, we've got the Fed later on today. Let's assume Ben Bernanke does announce more QE. What will that mean for Eurozone government bonds, and what would you be buying and selling?
Well, obviously, this would further support the rally across the board, we believe, because if you were to announce QE, this would be a major positive for risk assets. So against this backdrop, peripherals and also other core issuers should benefit with the yields falling further and spreads versus bonds tightening. But also we believe this would be a supportive scenario for bonds. That said, however, of course, we're always suspicious when it's, in a way, when it's too good to be true and everything is rallying. So also here we would look for setting up or preparing for an exit strategy in case this scenario turns around again. Okay, Michael, thank you very much. Well, QE3 is likely to give precious metals a boost, something the technicals suggest too. That's according to our chart of the day, which today comes from Barclays Capital technical strategist Phil Roberts.
It closed above its 12-month average in August. It closed above trendline resistance in August, and from that point on, we've seen the market push higher. That should lead to further gains still in the weeks and months to come. So we're looking now at the previous high around 37.50. But bigger picture, the outlook for precious metals is starting to look very, very attractive.
And finally, in corporate news, shares in BAE Systems and Airbus owner EADS nosedive following news of advanced merger talks to create a combined group worth $48 billion. A combined group would overtake arch-rival Boeing, but analysts argue that it will be a tough sell to secure both European and US government approval for the deal.
First of all, EADS and BAE Systems both have government shares, government ownerships. So when we look at it, EADS is owned by Germany and France, and a small share by Spain. This means that they have to agree to the deal. Firstly, the second one is BAE Systems is owned by the UK government. It only has a £1 equivalent golden share agreement, but there are specific programmes that will have to be ring-fenced for this deal to go through.
That's it for now, but do stick with Reuters on Reuters.com and the Insider platform. We analyse the results of the Dutch election and what the pro-Euro vote means for the country and Europe as a whole. I'm Jamie McGeever. This is Reuters.